Hello and welcome to Wake Up and Smell the Mic S&P 500 review for Thursday, February 9th, 2023. It's now 5:57 a.m. Central Time. We start off in the S&P 500 daily chart in DeMark looking back to end of October 2021. I'll zoom into the current area now. The S&P 500 daily chart has printed the combo and sequential buy setup 1 count, and to indicate that for end of day today on the 9th, there must be a close above 4136.48 for the price flip to the sell setup 1 count. Price in the pre-market hours for the S&P 500 at 6 a.m. Central Time is 4150. And the buy TDST and relative retracement up 1 get another chance at qualifying today with a close above the close from yesterday on the 8th. Keep going and close above 4165.87, and both of these momentum ups for 50% and 100% will become qualified also, and that qualifies the disqualified exhaustion up for 50% here and 100% up there, and nothing in danger of becoming qualified to the downside. And I can see another consolidation pattern starting to form here with these lows down here and this high up here. So they're just waiting for next week. On February 14th, the CPI report is announced at 7:30 a.m. Eastern Time. And you know the drill. The next day, retail sales. Day after that, the initial jobless claims. In the close above these two ongoing supply lines for today, we'll get those qualified as well. And those levels today are at, for the daily ongoing supply line here, 4169, and daily ongoing supply line 2 above it, 4195.11. and 4169.74. Might as well make it to the penny. The NASDAQ 100 Technology Index Tracking Fund for NDXT equal weighted. We'll zoom into the current area now. And it, like the S&P 500, has a chance to qualify this 50% and 100% momentum up for propulsion and keep going. And the relative retracement disqualified up 1 will become qualified with a close above that. And the ongoing supply line. And that has been quite a run since the beginning of the year. You can see that REI crossed over its oversold line back here on December 23rd, and then the ROC and DeMark 1 followed after that, so that's about as good as a buy signal as you can get when these two go over the oversold line. And they were sailing along up here above the overbought line, all three of them. And then REI came down and nailed the oversold line, while the ROC and DM1, DeMark 1, were still sailing above the overbought line up here. And that's when the dip buyers got the signal and came in on the dip here. And a little dip here. So dip buyers are definitely back and buying technology. And it's sailing along so good up here that it actually created an overbought region here for Rock and DeMark 1. Rock looks like it wants to head down a little bit, but still pretty good up there above the overbought line. And here's the NDXT itself, showing the diamond bottoming pattern we've been following along with. And here's the relative retracement up here. So yeah, it's getting pretty close, and we'll see what happens if it can make it above that and qualify and confirm this before the CPI report. That would be really something to take notice of. And we're watching the US dollar very closely. You can see it skyrocketing here these past few days, planed out at 103.27, still below that 103.50 area that we're looking to get back into gold if the US dollar can move above that 103.50 or so. And the Martin Pring diffusion indicator for the US dollar is finally crossed above its signal line here. It's a 21 EMA, and there was enough planing out and up and down here, similar to some of these other areas back here, to say that it's probably going to stay above that 21 EMA signal line and move up. And this is quite significant, as it happened at a very low level down here below zero equilibrium line in red. So we got to keep an eye on the dollar there. And that could pull in the reins on the technology run too, if that pans out. The S&P 500 support and resistance levels big board chart shows the gray areas at R1 and the weekly 2018 broadening top in dashed red. And the price in the pre-market hours for the S&P 500 at 6:48 a.m. is 41.45. So to the downside is still the usual suspects: pivot point, S1, the daily conversion line, the daily ongoing demand line, and the disqualified buy TDST. And on the S&P 500 1 minute chart from the 8th, you can see it came down a couple times and just about nailed that buy TDST and some of that other support underneath it. So over here too, so 2 times for sure, and around that 41.20 area too. It seemed to like that. And the dip higher came in down there too, just about nailed it by TDST as I just mentioned. So definitely an area to keep an eye on. And to the top side is the former bottom of range 2 and R2, the ongoing daily supply line there, and the uptrend line from 06/16/2022. And the New York traditional McClellan breadth oscillator to get back to zero has a little bit further to go than it did yesterday. 1,486 advancers over decliners required to get back to zero. And it's been a long time since we looked at this. Livecharts.co.uk, looking at the NYSE advanced decline, so you can watch the advanced decline line for the New York intraday and see if it's going to make it above zero or stay below it. It closed in the closing hour at negative 926. You can see in the pre-hour it's jumping up. It's 451. So you can see here in the NYSE traditional MCO up here, it's got about 1,000 more to go. Have a great day.